The next item we're going to discuss is market symmetry. Now, you'll find this to be a little bit out of the mainstream. However, when we think about symmetry, we're thinking about it in terms of the bigger picture. We're thinking about it in terms of where the market is in the larger picture in relation to a trend. Is a trend coming to an end? Is a trend likely to continue? And with market symmetry, we're able to identify visually where we're likely to be within a trend. Now, market symmetry is certainly one of the more esoteric items that we're going to discuss in this course. I think the word esoteric is completely apropos, intended for or likely to be understood by only a small number of people with a specialized knowledge or interest. Not only does market symmetry fall into the esoteric category, but frankly, this entire course falls into the esoteric category as it relates to many of the things that you have learned and many of the things that you will learn going forward. The advantage of many of the things that we're learning here is that you are absolutely gaining an advantage because a lot of the things that you're learning in this course are just not known by many traders, many investors, pros and amateurs alike. Let's start unpacking what I mean by market symmetry and how we could use it to our advantage. Now, I've switched charts on you for a couple of reasons. One is, if you remember earlier in the course, I mentioned that we're going to use a secret weapon. And the secret weapon is how we're going to apply the SPY, or as it's known, the spider chart, in certain aspects of our trading. The SPY chart is the exchange traded fund that tracks the S&P 500. Therefore, it also tracks the ES futures chart. So they're all interchangeable, but there are times when we want to keen in on the SPY chart for specific reasons that we're going to get to a little later, but I figured now is a good time to begin to get familiar looking at the SPY chart, as I'm going to ask you to look at this chart from time to time, and you'll understand why and how it can be used to your advantage a little bit later in the course. The other reason why I wanted to introduce the spider chart now is because I hope by now you're beginning to understand that everything you're learning in this course is not just applied to the ES futures chart or the S&P E-mini futures chart, but can be applied to any chart. All the knowledge that you're acquiring, all the technical tools that we're discussing can be applied to any other futures chart, can be applied to stocks, can be applied to any chart that has candlesticks and that market has liquidity, meaning it has buyers and sellers to a decent magnitude or a decent volume. So I just want to make it clear, everything in this course is not limited to the ES futures chart. Back to symmetry. The way we're going to use and the way we're going to look at market symmetry, again, is from a larger picture perspective. The way I look at symmetry is when the market makes a move, there is a likelihood at some point in the future it will make a mirror image move in the other direction. Let me show you what I mean. Let's focus in on this low where the circle is. That number happens to be $222.73. The market was obviously in a downtrend, trading into that area and found support and reversed. Now, this is a 60-minute chart, so you can see that the days are broken by the spaces in the chart. So the following day, the close of the following day is found right here. And that number happens to be $225.18. Now, if I took a mirror image of that and flipped it around, meaning from the low to the close of the day where this arrow is here, and I said, well, how much of a distance would it be to get up here? And what I'll notice is at the top of the chart, the number happens to be $227.75. What's interesting about that is it's only 8 pennies away from being equidistant, meaning there was $2.45 from here down to the bottom, and within 8 cents of the same number from that point to the top. Now, I'm not suggesting that you can make a trade off this information, but what I am suggesting is you begin to look at the chart from a different perspective. There are times when you'll notice the symmetry playing out, and when you begin to use the other factors that we've discussed and will discuss in this course, you begin to put them all together and use all the information together as it's all complementary to each other. The more information you have pointing to the same thing, the more likely you are to be correct in that at the top of the chart, the market would mainly or likely stall out and want to pull back, especially if it was an area that you had determined would be a decent or valid resistance point. Let me show you the thought process, more specifically what I'm talking about, and you'll start to see how this all comes together piece by piece. I'm teaching you little pieces at a time, but I want you to start to see how when we use the pieces together, you begin to look at the market differently. Let's just assume for a minute the market is trading in this zone here. As a trader, you're trying to determine, is the market overbought? Is it on a breakout? Are we going higher? What should I do? How do I determine what the next move is? Is there a trade here at hand? Now let's assume, for the purposes of this lesson, that we've determined that this area on the top where the line's running across should be a resistance zone. And you'll have to just go with me on this for this lesson, as we're going to get into how to determine support and resistance zones very, very shortly. But let's see what else we have. Well, we know we have a bottom, but that's not really helpful for where we are now. Remember, we're up in this zone, and we're looking to see if there's a trade at hand. So we have a bottom, and then we have this. And on its face, we wouldn't necessarily know that that price level where that particular day closed is important. But the reason why it may be important, because the market will trade to certain numbers that are important. We may not always know those numbers are important until after the fact, but the market will trade to important numbers, and the market is telling us that certain price levels on the chart are important. So if the particular day over here closed at that number, I'm going to assume it's an important number. Where the market closes each and every day, you have to assume has some importance. You don't have to know why, and you don't have to know ahead of time what that number is going to be, but after the fact, just assume that any close each and every day is an important number to the market, and we will use that number at some point in the future. So what do we have so far? We have a low, and we have a closing price that we're going to say is important. What else do we have that's important? Well, we have the following day where the market opened right here, and then as we traded along, when we came back down to retest that number, the market held, meaning we retested this number here, we retested the opening price, and the market put in a tail candle, also a doji candle. That's important. That's the sign of a trend change, and we started higher. How long did the market go higher for? Well, it went higher for 9 candles up here. That's a tail candle. And this is the 10th candle here. Remember, 9 is a multiple of 3, and 10 is 7 plus 3. These are important numbers. There's also a couple of tail candles that we just learned before, back to back. And, by the way, it happens to be equidistant when we take the low here, the closing price here. That's an important. Closing prices are always important. And when you add those together and flip it around, you come up to this resistance zone up here. What I want you to realize is the more evidence we have, the more clues we have, the more items on the chart, such as counting candles, doji candles, closing prices, market symmetry, the more evidence we have pointing to the same thing, the more likely we are to find an area where we can determine the market is due to either pull back or due to bounce higher. And obviously you can see the market decided to change trend. Now, you're not always going to find market symmetry on every chart you look at, every point in time you look at. What the point here is that when we can determine there is market symmetry and there are other factors that we've learned about present, and are we into a potential support or resistance zone, The more evidence we have, the more likely we are to be getting ready for a trend change. Now let me show you another example of how you can use this information to determine a potential future area that the market may find support or resistance, along with some of the other items that we just discussed. Now keep in mind, the symmetry aspect of what we're talking about, it's not necessarily going to be to the penny, even to the dime, but it's in the general area. Symmetry doesn't have to hit the number on the dime. We're looking for general areas where we want to start using the other tools that we know about to determine if there's something we should know about the market. So let's take two areas on the chart. The top number is $212.52. The bottom number, the bottom circle, is $198.65. The difference in those two numbers is $13.87. So for the purposes of this, we're going to round up to $14. Market symmetry would indicate that at some point in the future, based on this pullback here, that the market should get to and likely find at least temporary resistance at an equidistant, meaning the mirror image on top. So if we added $14 to the area here, we come up with $226.39. So maybe it's 226, maybe it's 226.50, maybe it's 227, but in that neighborhood. Let's fast forward in the market and see what we found. Now I put a line on the chart at $226.39. Let's see what happens when we get there and what the market did. Did it find resistance at that point? Interesting. See what happens? Now, it was a temporary resistance point, but look what happened. The market consolidated. First, it stalled out, and it consolidated. These technical tools can be applied to any chart, whether it's a 10-minute chart, a 60-minute chart, a daily chart, a weekly chart, a stock chart, a futures chart. It doesn't make any difference. The same rules apply across all markets, all time frames, all charts. And that, my friends, is how we can use market symmetry to our advantage.